Hi, this is Randy with Toxically Mail, and we're doing our first interview with a panel specialist. We're trying to help everybody out there, especially our veterans and our blue-collar brother and sisters. And today we're going to focus on financial management. Now, Mr. Bernie Davey here, he was in the military for 24 years as an officer. Don't hold that against him for all you enlisted guys out there. But he's been doing this quite a while. He did 24 years. Am I correct? 24 years in service, sir?
That's right, Randy.
And then did 13 years civil service, basically doing the same thing. Did I get that right?
Yep, sure enough.
So when it comes down to our interviews here, I want everybody to get used to seeing the type of interviewees we want to have. We're not trying to go above and beyond where people wouldn't have the same skill set or be able to affect us on a day-to-day, our day-to-day lives. What we're trying to find is people that are out there that have done it, that have been in the same situation that we have been in. It can actually give us tools and tricks to succeed in life, succeed in finances, succeed in our businesses, succeed in our work, whatever it is we're trying to do. And that's why we chose Mr. Bernie Davey here. Another reason was when I was looking around to try to get somebody to help us out with financial management. I've been there myself. I've had a few slips and twists over the years. We were talking to financial specialists that want to tell us about where to put our money when it came to loans or accounts and so on. And really what I wanted to focus on is the blue collar guys, the vets, the military vets, blue collar workers, 75 to 85K a year or more or less, that in today's economy maxed out their credit cards, maybe due to COVID, maybe due to whatever the excuse is, multiple loans, falling behind on payments, getting calls from collections, maybe getting calls from banks. And that's why we're here. So, Mr. Bernie, if you want to start us off, what do you got to say about that?
Well, Randy, first of all, I want to thank you for having me on the show because
Absolutely.
I've done financial counseling for military members in the past, strictly as it was my duty, not getting paid special or anything like that. So, but I enjoy seeing guys get help when they're financially strapped, because believe it or not, I was in that situation too. Even as an officer, I've been in that situation. My family and I were, maxed out credit cards, living day to day, or, paycheck to paycheck. So this is important stuff to me. And if we can help folks out there, great. I do want to, remind people that I don't give tax or legal advice, nor do I do financial planning. This was something that I did when I was active duty to help people out. And so I learned some tricks, and of course it helped myself and my family get out of debt as well. So that said, I wanted to start off with, there's a little video that I encourage your users to go out and search for. Steve Martin did a skit on Saturday Night Live saying, don't buy stuff you can't afford. It was, it's kind of comical, but it makes a lot of sense when you think about it. Don't buy stuff you can't afford. But that aside, I know a lot of people have gotten themselves into trouble just buying the stuff they needed. And that's what hopefully we can address some of that today, how to get out of some of that financial debt. So one thing I want to stress right off the bat is, for this to work, it requires a lot of dedication and a total team effort. If you and your partner are not on the same page, it's going to be very difficult. If one of you is a spender and one of you is a saver, it's going to be hard to make anything work, make any progress. So, and if you're not serious about getting yourself out of trouble, then it may, it's not going to work either. It's like trying to get in shape or lose weight. If you go at it halfway, you're not going to be very successful in it. If you're, you want to lose weight, but you're sitting there on the couch eating potato chips, a bag of potato chips at a time, it's going to take some effort.
So it's not magical, is what you're saying. There is no.
Oh no, by no means. And just like you didn't, hey, you didn't get out of shape overnight. You didn't get overweight overnight. So it takes time to get out of shape. It takes time to get out of shape financially. And in most cases, I mean, there can be some very traumatic events that have, thrown people in the hole rather quickly, but typically it's a slow buildup. And just like that, to get, back in shape, to lose weight, it's going to take some time. It's going to, not an overnight process, like you said. Uh, Again, slow process, can't be fixed overnight, didn't happen overnight. It takes a long-term commitment. So, if you're dieting or you're getting in shape, you can't work out, 10 hours a day and get in the best shape of your life and then stop working out. It's not going to happen. Financial, no different. Once you get your finances in shape, you got to work at it. Anything that you want to achieve, you got to work at it, and it takes commitment. So hopefully you make it a habit. So basic starting block is a budget. A lot of people don't even have a budget. They don't know where their money's going. And if you don't have a budget, how do you know where your money goes? How do
Right.
you know where it should go? Um, and there's some tools out there that you can use. One of them, Excel spreadsheet. There is a budget program or budget spreadsheet right in Excel, and I think most of us have access to Excel one way or another, maybe through the office or even at home through school, whatever. So that is a basic budget that you can budget tool you can use to set up a budget and kind of track where your money's going. So
When they're setting up a budget, would you probably stress to them that they need to be honest about what they're spending?
exactly. Yes, that's key. And a lot of people, oh, I'm spending, 5% on eating out. And then, but they don't know because they've never tracked it. And if they don't track it, that 5% in reality is really 20% or
For
something
sure.
way above and beyond what they thought it is. Um, there's several schools of thought on what your budget should be. The most basic one is 50, 30, 20. And what that means is 50% for your needs, 30% for your wants, and then 20% for savings. But then, there's other budget tools that go into more descriptive, like rent and housing should be 20 to 30% after tax. We're all talking about after tax of your available funds, and then food 10 to 15%, and so on and so on. I won't
Mhm.
go through all those, but the thing about budgets is a budget has to work for you. If it's something that, oh, I'm locked into these percentages, and if I go over that, I need to flog myself.
Mm.
No, no. And not everybody has the same budget. Not everybody has, some people like to stay at home, and some
Mm.
people like to go out and party all the time, so my budget is going to be different than your budget.
For sure.
Randy, your budget's different than my budget, depending on what your needs are and what your wants and desires are. So you have to build a budget that works for you, and you don't want to be so locked into that budget that you have no flexibility,
Right.
because that doesn't do you any good either, because then it just becomes um, an anchor that you start to regret it, or resent it.
Mm.
I don't know about you, Randy, if you got a budget or have been through that process at one point in time where you had such a strict budget that, my gosh, if I deviate from that, it becomes a problem.
Right.
I know.
It gets to the point where you don't wanna stick with it, you know? It's
Exactly.
almost like working out. If you get hurt in the gym, you're like, "Nah, I ain't doing this no more." So you gotta
Yeah.
kinda build up to it.
Exactly. It's like anything. If it's not flexible and if it doesn't work for you, you're not going to stick with it. So
Right.
budgeting 101, there's other tools out there. I mean, your bank, your financial institution, where you use credit union or whatever, they can probably provide, a lot of them provide budgeting tools for you. So let's say now you're working on a budget. You have, you've come up with your own percentages or what you think you should be spending on X, Y, and Z commodity. Now what you need to do is go back and look at where you've actually been spending your money, whether it be your bank statement, if you're using a debit card, your credit card statements, if you're using credits cards, cash, keep records of that if you're using cash. Don't know a lot of people that still use cash, but I will say one thing, Randy. When you use cash, man, it makes you think. It makes you think. If you have to pull out greenbacks out of your pocket, it's so much more difficult to let go. At least it is for me, I guess.
No,
And I think it is for
absolutely.
most people. If you
Yeah.
see that cash going out, that's a lot harder to spend foolishly,
Mhm.
shall I say. But with a credit card, boom, swipe,
Yeah.
tap, boom. You know, you don't even see it until the bill comes.
It
So,
a lot of
uh,
younger people treat it like it's free money, and it
exactly.
ain't free.
Exactly. And it goes back to, there was a system, and I think some people still use it, the envelope system, where they take all their cash and, put so much for housing in one envelope, so much for entertainment, so much for food in different envelopes. And then when that envelope's gone, well, we're done with, partying for this month. We have to wait till next month, kind of thing. Um, and I did that. We did that for a couple months here, when at one time, during our process of getting out of the hole, was we went to cash only. And I'll tell you what, it really makes you think, hard about, do I really need that? Do I really, is it worth my limited cash to go out there? So, uh, but so now you built your budget. What you need to do is you need to go in and fill in the numbers of, I spent this on food, I spent this on transportation, this on savings, personal stuff, utilities, and then debt payments. And you'd be surprised. I think most people will be surprised if they don't have a budget, if they've never budgeted. I think they'll be surprised when they actually see what they think they're spending versus what they're actually spending. So um, look at credit card statements, bank statements, help you compare your budget to your actuals. Now, um, moving on, if you find yourself short on funds, I think you need to determine which bills are most important, such as rent/mortgage, utilities, food, and focus on them first. Then focus on paying your debt. But we don't want to ignore debt.
Right, of course not.
You talked about people getting calls from the creditors.
Right.
One thing you don't want to do is you don't want to ignore the creditors. Sometimes it's so tempting, just hide from them.
Mm,
But think about, hey, you bet your buddy $50 on the football game and he lost, and now you can't find him.
mm,
you know what do you think about your buddy? It's like, all you want to know, I mean, he's still your friend, you still
mhm.
want to hang with him. Hey, just because you owe me money, don't ignore me. All right, now realize your creditors are not your friends,
No.
but the same principle.
Right,
They get nervous if they don't hear from you,
right.
if you people ignore them.
Mhm.
So, and many of them will work with you. They will work to reduce your interest rate. They'll maybe lower your minimum payment. They'll take, some fraction of the portion of the debt that you owe, as long as you work with them, because that's, they're in the business of collecting money.
Right.
They don't want to be ignored. Um, so I encourage people, don't ignore the creditors if they come
Yeah, it's
knocking at
not
the
gonna go
door.
away. If anything, it's
It's
just
not.
gonna get worse.
Exactly. So, um, again, rank your bills in importance, and then you need to obviously pay the rent, the mortgage, utilities, things like that. And that's where it goes back to that 50% for your needs, and then your 30% for your wants. Sometimes you might have to do 70% for your needs, and your wants take a back seat until you get out of the hole, or till you get some wiggle room. So once you've determined, where you're at, what your big bills are, what your credit bills are, there's two approaches to getting out of the hole. One, increase your income, or two, decrease your expenses. Okay, that's if your budget is, you're over budget every month. Two ways to approach that. Again, increase your income. Maybe you can volunteer for overtime. I don't know, if your job is, if you're salaried, maybe not. But if you're an hourly employee, maybe you can volunteer to work some overtime. Maybe you can take a second job. Right now, we're in the seasonal period where seasonal jobs are pretty prevalent. Um, Another thing people can do is improve their skill set. At work, hey, if I get this safety certification, maybe that, then I can go to the boss and say, I'd like to, be the safety guy, or increase my responsibility, and therefore potentially get an increase in pay.
Right.
I don't know how it
Gives you
works.
room to negotiate. Yeah, for sure.
Exactly. Anytime you can increase your skill set, you are, you become more valuable to that organization, or maybe it's time to look at another organization where where they would recognize your skill set and
Right.
pay you accordingly. So you mentioned earlier, Randy, one of the things you want to help, or one demographic we want to help, are perhaps our veterans out there. And I would say, if you are a veteran who has a VA disability
Mm,
and you haven't taken a look at that, say you've been getting the same percentage for the last 10, 15 years, um, look at your conditions, look at what you're getting your VA disability for, and see if any of those have worsened.
right.
Case in point, my brother-in-law was getting 10% for a scar he had on his face. 10% doesn't sound like much, but what happened was that scar, as a result of the injury that caused that scar, has now caused dental work that is
Okay.
now raising his percentage. And this dental work, as it gets more extensive, is now going to raise his disability a little bit higher.
Mm,
So if you've been working on a set percentage for quite a while now, maybe it's time to contact, like, the Disabled American Vets,
mhm,
for instance, to help. They can be an advocate for you
right.
to potentially get a higher VA disability.
Yeah,
So
usually around a lot of major cities, especially those like San Antonio, where we're from, they have the VSOs, the DAVs, people that can talk on your behalf. But I've noticed a lot with vets, especially the older ones, myself included in that. Back when we were in, we did not want to go to medical, and a lot of those guys have very thin medical records, so it was hard for them to get their disability, any type of disability. The key here is, once you're denied a certain percentage or anything, it gets further on and it's still acting up. For those of you out there that are having those problems, appeal that. And I'm pretty sure that's what Bernie's getting at. There is an appeal process. Sometimes introducing like new issues is not going to go through, but an appeal, absolutely, I would keep pushing that. And that's happened over the
exactly.
last couple administrations, not just Trump. Biden did it too with the PACT Act. Before that, it was Trump again. Every administration seems like they're trying to put something else in to help the vets. So I would definitely reach out to people. You were saying?
Exactly. Yeah, that's exactly what I was trying to get at, Randy. Thanks
Mm,
for clarifying that.
mm,
That's perfect. So, I mean, those are just a few ways that you may be able to increase your income, but typically it's easier to decrease your expenses than to increase your income. As I was a government employee, and the system there is, everybody at a certain step and grade got paid the same. Didn't matter what your extra qualifications were. Um, in the commercial sector, it might be a little easier to get credit for some of those special skill sets that you have. But that doesn't mean don't look. Don't go out there and look. Yeah, you want to go and research your possibilities, your skill sets. Um, and it can be just a little bit here and a little bit there. It's amazing when if you got 50 cents an hour, it doesn't sound like much, but if over the course of a year, that little bit extra income can help chip away at some of this debt that we're talking about. So, all right, moving on to decrease. Decrease, basically what we're looking at is the unnecessary expenses. And what are unnecessary expenses? Well, my unnecessary expenses are different than Randy's, that are different from Joe's and John's and Jim's. And, I can't tell you what's unnecessary and what's not. To me, cigarettes, tattoos, lattes at Starbucks, those are all unnecessary. But
right.
to the viewers out there, who knows, they like tattoos, they smoke cigarettes, they drink their lattes. Again, it's a personal thing, just like the
Mhm,
budget is flexible and is personal to you. What's an unnecessary expense is it is totally your call. All right. But those are some things to look at, that I think, eating out. When
that's
I
a
was
big
a
one.
kid, that was a luxury.
Oh, yeah,
Now
for sure.
it's become a commonplace thing.
Yeah, I used
But
to get once a month McDonald's.
yeah, yeah, I mean, if we got once a month, we were lucky,
Right?
I, of course, grew up in the country and
Oh yeah,
uh, had no way to get to any fast food.
for sure, for sure.
But it's become so common now. I think as people are busy, busy, busy all the time, it's so easy just to go and eat out. But if you look at the expense, man, and I don't know about you, Randy, but I've been just noticing how much even the junk food places, I won't name any names, but how the junk food places have raised their prices so much that it's so much cheaper to eat at home.
Oh, for sure.
You
Before I started meal prepping, when we were going, well, I get paid to travel with my company, and
uh
then they pay for our food and stuff, and just eating out. And I was like, oh my God, for one guy eating out 3 times a day, over $90, depending on where you're at.
Yeah.
It's not what it used to be. But a meal prep, I can do $20, $30 a day by myself, a whole day, and that's eating good. So yeah, I feel you.
Starbucks or other coffee places. Okay. Hey, I like to get it every now and again too, but I got a coffee pot at home. I can make my own coffee. Um, a lot of these unnecessary expenses that might be, or you may say they're necessary, but are they necessary in the way that you're getting them? Coffee. To me, that is a necessity. I gotta have my coffee.
Oh, yeah, I think
But
most of the viewers here will say the same thing. You gotta have that caffeine. Most of us
yeah,
survive on caffeine and hate, so yeah.
exactly. Oh, hey, let's talk about subscriptions, all right? Um, dude, I mean, you got Netflix, you got Paramount, you got Prime, you got, Hulu, you got all these video subscriptions for one thing.
Mm,
You
mhm,
you got, then on the music front, you got Spotify, you got Sirius, you got YouTube, Music or YouTube Prime or whatever. And these things, hey, it's only, $16 a month. Well, times how many though?
right.
Man, it eats up. Okay, well, I gotta have what is it? I gotta have Prime because I got the new season of Reachers coming out, man. I gotta see that. But most of these subscriptions are month to month. Unlike a cable TV where you got a 2-year contract.
Yep,
I can cancel it this month, and when the new season of XYZ comes out, okay,
bring it back,
resubscribe, right?
right?
So and then I people need to look at how much are you actually using that subscription. Pardon me. You know, um, Sirius XM. I got it when we bought a new car many many years ago. It was included for free, and they worked. They gave it to me free for 3 months. I got hooked on it. Had it ever since. But now I only have it in one vehicle. And then I have the app on my phone. So in my other vehicles, I can listen to it off the phone. I don't need a subscription for each vehicle. So I've got the very basic subscription. Just encourage folks to look at those subscriptions as well. And are there ways to cut back? If you got cable TV, yeah, I still have cable TV. Yeah, I'm old school. Okay. I don't have a landline though. I got rid of that.
Gotcha.
but if you got a cable TV, look at all this crap you're paying for,
Mm.
and you know how they do it.
Oh yeah,
Hey, we'll get you in with we'll hook you in with a good deal, and then we'll just keep raising the price. Well,
for
call
sure.
them and threaten to cancel. Okay,
Oh yeah,
maybe
bring
they'll
it back
cut
down.
your subscription in half. Maybe you don't need all the bells and whistles that you have on your subscription, but a lot of times when you threaten to cancel, they'll work with you to lower your price. So subscriptions, I think I beat that horse enough. So
Oh yeah. Well, I
lottery
mean, but
tickets.
I know what you're talking
Go
about
ahead.
when there's the subscriptions, though, because a lot of people don't even realize they still have the subscriptions. So that comes back to that budget you were talking about. They need to really review their bank account and find out where that money's going, because you might
Yeah.
realize you have a subscription or 5 subscriptions there you don't even use, and you're still paying $20 a month for it.
And that's a good point. There's a commercial out there for some service. I don't know the name of it.
Well, I
I
know the one you're talking about, but
Yeah,
yeah, go ahead.
where they do the commercial, and, "Hey, I was paying for my ex-boyfriend's subscription." Yeah,
Hmm.
if you don't pay attention to it, they can creep up. You sign up for one, and, I just saw something posted that, like on YouTube or one of these services, that advertisers are paying for you to see their ads, and then that same service is charging you, $4 a month, so you don't see their ads.
Right.
So it's like they're getting money. They're getting the best of both.
Either way, they're
Exactly.
getting paid.
Yeah. So,
Yeah.
hey, lottery. That's another one. It's a tax on the poor, is what they say.
Mm.
But it's entertainment. Yeah. But, just think about if you just buy a $5 scratch off every week over the course of, it doesn't, $5, it's $5. That's not much. But over the course of a year, that money could be applied towards your debt. Right. So, again, but it all comes down to what you yourself find is necessary. You don't want to go on such a strict financial diet that, you're getting, you're just getting sick of it and you go crazy then. It's kind of like physical diet. If you cut out all the chocolate and then you end up binging on chocolate, you haven't done yourself any good.
No,
Same
you
thing
probably just
financially.
made it worse too, especially if you start
Exactly.
binging on debt. Yeah, you done now.
Exactly. Exactly. So again, only you can prevent forest fire. No, I'm sorry. Got lost. Can determine what are the unnecessary expenses.
Right.
But again, allow yourself some things. You got to have some things that you can't just totally eliminate the quote unnecessary things,
Right.
or you're just going to go crazy. Another way to potentially decrease your expenses is refinancing a home loan. If your current interest rate is significantly different from what is available now, but you may save money. But one of the problems that people get into is they may refinance a home and then take out cash on some of their equity, and if they don't smartly use that cash to pay down other debt
For sure.
and go out and, I got all this money now, and let me go buy that new thingamabob. That's where they get themselves into trouble. But be advised, when you refinance a home loan, there's costs involved with that.
For sure.
And you may need to come up with cash up front. So by all means, do
Plus,
homework.
you still have to have a credit score high enough for that too.
Exactly.
Sure.
And if you're in financial straits, your credit score may not be high enough. So
For sure.
okay. So childcare. That's another one. Very, very expensive these days. Fortunately, my wife and I didn't go through a lot of that. She was a stay-at-home mom, but childcare is very expensive. And, if you're losing money by one of you working, maybe consider staying at home or, taking a different shift so that one of you can watch the kiddos. But your sanity is important too. So if you need work, if you want to work, you need that break. Totally understand that. Totally get that. Or upward career progression. You don't want to throw away your career progression either. But so maybe that's where you can look at, okay, maybe we can swing shift, different, so that somebody's home with the kids all the time.
Right.
But it's just something to look at. It's become a, I don't want to say convenience. It's a necessity, but it's also become a convenience if you don't look at the best way to manage that. So, all right. So you got your budget. You've looked at ways to increase your income and decrease your expenses. Now, what are you going to do to help pay off that debt? Okay. So what I recommend, what worked for us, we made a list of all of our credit cards and we ranked them in order from smallest balance to the largest. Okay. And then what we did is we took the smallest one and we added, and I don't have the numbers with me, but my wife and I, we added, $10 a month to that minimum payment and paid that one off. And it didn't happen overnight.
Right.
Certainly didn't happen overnight, but we paid that off. And because we weren't using that money for anything else, when that was paid off, moved that to the next lowest balance that we had. Okay. And then, that one got paid off before or sooner than it would have if we just made the minimum payment. And then you just keep chopping off those bills like that, roll over that payment to the next smallest balance. You keep going, and eventually you'll start chipping off those bigger ones. One thing to watch out for with credit cards is, I don't know how many times I've been to a store where they, would you like to put that on your new, this card and get 10% off today? Well, it sounds good to save that 10%, but then what happens? Okay, now I've got another bill to pay, another bill to
Right.
pay. What I would recommend
And
is
sometimes those interest rates are like what, 25, 30%.
exactly the
So that
store.
10% didn't save you anything.
Yeah, yeah. Someone in my family once, when they were struggling, it was a birthday coming up, and she bought a bike on a credit card because she got 20% off. But then she said she would make the minimum payment, and by the time she was done, she paid an extra $20 on the bike than what she would have if she.
Right.
So, yeah,
And the more
that's
expensive purchases you got, it adds up pretty quick.
it. It certainly does. It certainly does. And now, if your balances are about the same, say you've got 10,000 on two different credit cards, then what I would do is look at which one has a higher interest rate. Okay, because obviously you want to pay that one off sooner because the higher interest rate, more of your money you're paying to them is going to interest and not knocking down that debt. So the more that you can put towards that high interest rate card, the quicker you'll get that debt paid down. So, but again, if you have them where they're different amounts, then my advice, others may disagree and say always pay the higher interest rate first. But I think the sooner you can pay off and roll that money over from those smaller ones to the bigger ones, then the sooner you could pay it all off.
And some of the viewers might have actually heard about this before. Isn't it called the snowball effect?
Pretty much, yeah.
Yeah.
I mean, of course, the military, they had their own version
Right.
of
Sure.
it. Um, Whatever it was called.
Right.
It's been so long, Randy. I don't know
Right.
what the program was, but it's very basic. I mean,
For sure.
it's expressed in many financial planning guidance. Um, is paid, keep rolling that over. Because once, if you're doing without that money, keep doing without it for a little longer and a little longer and a little longer. It's so easy to, hey, I got that bill paid off. Now let's go and,
Do something
splurge.
fun. Yeah.
Oh,
No.
no.
And now we're
Okay.
back into it again.
Exactly. Wait until you're done.
Right.
Then, then you'll, when you have a debt-free lifestyle, it's so freeing. It's so, mentally freeing. And then you can do some of those things. But by the same token, you will have ingrained in yourself a more conservative financial perspective, I think, to where you don't go out and just go hog wild every time you got some monies. Okay. To help kind of illustrate how this works, there's so many mortgage amortization calculators out there. Spreadsheet used to have an amortization table in it. I don't know if it does.
Yeah, it still does. I've seen it.
It still does? Okay, because I've
Yep,
been
I've used it.
using the same one I had from, many, many years ago. And what it does is you can say, all right, if I add $10 a month to this payment, and it'll show you what happens, how much quicker you pay that off, how much interest you save. So, and there's so many free ones out there that
Mhm.
please don't anybody spend 99 cents to buy an app to do that, because
Right.
that's just 99 cents you can put towards a bill.
Yeah, you can see
But
them online just about like for every major bank out there when they're doing like the
exactly.
mortgage calculators, the amortization calculators, like just paying an extra $300 a quarter shortens your loan amount by quite a bit.
Exactly. Especially on a home loan.
Mm.
But again, there's so many out there, and point you made, and I talked about it earlier, is financial institutions, your own that you deal with, whatever bank, credit union that you go through, reach out to them first for an amortization calculator. May even be on their app, their
Sure.
website. So. All right. Earliest I said, we talked about focusing on your most important bills first, but that
Mm.
doesn't mean you ignore your other bills. And we
Right.
already talked about this and talking to your creditors. Many will adjust the interest rates and minimum payments, but only if you call them. Don't
Right.
run away from them. So,
Right.
I saw that happen a lot with folks is when I was doing this full time in the military for that period of time, was people would just ignore their creditors and like, well, what do you expect them to do? They're going to keep hounding you.
Right.
Whereas if you reach out to them, or answer their phone calls, and it's hard. I know I know it is. I'm not saying this is the easiest thing in the world, um, but you really owe it to them, you owe it to yourself, because believe it or not, you'll have a better peace of mind when you engage with them and set up some kind of payment program. If you tell them what I'm working on is I want to pay this bill off so I can get to your bill, or I want to pay your bill off sooner. Can you reduce the interest rate so that more of my money going to you pays that off?
The worst
You'd
I
be
can tell you is no.
Yeah, exactly. You're in no worse shape than you were, but I bet most of the time you're gonna find that if they think that they're gonna get nothing versus, "Hey, this guy's willing to give me $5 a month or $5 a week, whatever, until it's paid off," just like your buddy who lost the bet to you, "Hey, dude, pay me $1 a week until you pay off the $50. I don't care, but just pay me something." Um, all right. An area that I'm not real big on, Randy, is consolidation loans. And the reason I'm not is because so many times what happens is it sounds good on paper. All right, I'm going to consolidate these 5 bills into one. And then I see that. So now I'm paying this consolidation loan, and now I've got 5 credit cards that have no balance on them. Well, I'll just use it for this
No. Yeah.
this little thing over here, or this little thing. Boom, 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 boom. Pretty soon it stacks up. And now you've got this consolidation loan and you're paying back these 5 credit cards
You're
now.
twice in the hole at that point.
Exactly. Exactly. So again, goes back to what we said earlier. Takes commitment.
Mm.
It takes commitment. If you if you're committed to it and if you stick with it, a consolidation loan can work.
But that's only if you play it smart, right? If it's like
Exactly.
so the consolidation loan, as long as you're consolidating the debt that is a lower interest rate than the loan you're taking out, also due to compounding credit, revolving credit, all that, loan is all generally better than a credit card. Would you agree?
Yes, typically,
Yeah, but
because
it also
credit cards.
depends on the interest rates. Yeah.
Yeah, yes, exactly, and you've gotta do the shopping. I get I I get letters from one of my credit card companies, offering me a consolidation loan, um, on and I have one bill. I use my credit card, pay it off every month. So but I get something from this other credit card company saying, "Here, get this loan," and the minimum interest rate, they don't tell you what yours would be until
Right.
you apply.
For
The
sure.
minimum interest rate is higher than the credit card that I would be paying
For sure.
off.
Mm.
So makes no sense
Right.
in that case, of course. So um,
What about
if
what about the 0%? Because I see people like do these a lot. The 0% transfers for so many months. What do you think about those?
was again um, another cautionary measure there. They're okay if
You
you
can
read the
pay it
fine
off.
print, if you pay it off. Because a lot of times what happens is if you don't read it carefully and if you don't pay it off, say I got 6 months at 0%, 7th month I haven't paid it off. Now they charge me that 21% or whatever it was, all the way back to the original loan.
Yes.
And
Yeah,
boom,
I see a
now
lot of people get trapped up in that.
exactly.
I was one of those.
Yeah. I mean, there are some, I believe there's some that will let you, that then your interest rate will start from the day your grace period is over. But you have to read those things very, very detailed to make sure that you're not getting stuck. And the best way is, yeah, if you can pay it off in that period of time before the water offer period is over, then do
If
that.
you can't,
If
then
it's
don't do it. Yeah.
Yeah, and you may even consider, okay, say I have $20,000 in debt on this one credit card,
Mm.
and they offer me, I think that I can pay that maybe 6,000 of that in
Right.
that 6 month period.
Okay.
Okay, that might be worth transferring just that 6,000.
For
Don't
sure.
transfer
And
the
then
whole
leave it
amount.
at that, right?
Exactly. But it takes commitment. It takes dedication to make sure that you aren't getting trapped into moving all that money and then you're paying a higher interest rate at the end,
For
because
sure.
that doesn't help you at all. So,
No.
all right. Moving on, debt management companies. You've seen the advertisement for them on TV.
I'm waiting to hear what you got to say about this.
Well, you're going to be disappointed because I don't have a lot to say about them, really.
Mm.
Because, when I was in the military, you didn't, um, it was paying your own bills,
Mm,
work to pay your own bills. I don't know about a lot about debt management companies, but maybe if you have me back on, Randy, I can do a lot of research and figure
okay.
out, and we can talk specifically about that. I don't know.
Mm.
Um, uh,
'Cause a
again,
lot of the times what I've seen is like, you'll see all these advertisements on social media talking about these consolidation loans. They get people to call in, and these people they don't have enough credit score to even get a consolidation loan, and immediately gets transferred over to a debt management company where they tell you, don't pay your bills for 6 months, we'll take care of it. Now, it does it work? I mean, I haven't talked to too many people that say these debt management companies work. I'd like to hear from people if they have. Hell, I'd like to see what you can research on it. But from what I've seen, is those debt management companies will sink you to the point of you basically your credit score takes a hit, just like you filed bankruptcy, and it stays on your credit report for 7 years. So you're still bad off. You might have more money left over, but if you're looking for you want to buy a house or you want to buy a new car, you're going to have to do that cash because you ain't going to be able to get a loan.
exactly, exactly. That's why I always stayed away from the debt
Mm,
management companies.
mm.
Um, uh, I I always advised use the declining balance type, um, or snowball as you referred to it. Use that approach and talk to your creditors. Those are the two main things that I think that folks can do to help themselves.
Well, those
Um,
debt management companies, from what I've read on them, they're doing the same thing that you were just talking about. They will call your creditors and have them negotiate either a lower settlement or a lower interest rate. When they're charging you to do that, you could have just done it yourself.
exactly, exactly. It brings up a point. My uh, wife's cousin worked at the IRS, and all those IRS people or commercials that you see. The IRS has people that work to set up debt payment plans
Oh yeah.
with you. So you
Mhm.
don't want to contact Joe's IRS management company or whatever, who's going to charge you something when the
Mhm.
IRS does that for free.
For sure.
Same thing with the creditors. Same thing with the creditors. Call the creditors yourself and you work it out. And then there's no middleman.
Right.
There's no fees to any, you know, you're not going to pay a debt management company, nor is a credit card company going to have to, pay the debt management company. Some of them probably work on, getting paid from the creditors. Some get paid by the person who's credit has a credit card debt. So um, if you go direct to the company, the credit card company, you avoid all that. So, but I can do some more research on that. What
Yeah,
I've
that work.
seen, some folks have said, no, I got screwed in the end.
Oh yeah,
Got to
for
read the
sure.
fine print, just like anything
Mm,
else.
right.
Okay.
Don't just sign willy-nilly on something. Make sure you're reading the entire document. That doesn't
By
matter
all
what you're
means.
doing. Yeah.
By all means. Yeah. I mean, that's just good business practice anyway. But we tend to, get a little anxious and
Mm,
sometimes we sign without fully reading it. Okay. I want to talk quickly about emergency savings.
mm.
You know, I kind of have a different opinion. I think some people say you need 6 months. I don't know. I don't know what the right answer is. I think those that work in the government know, having gone through the recent shutdown,
Right.
know that you got to have something
Mm,
in the bank. But if you're paying 20% interest on credit cards and you're getting 2% interest on money that's in savings, you gotta excuse me, you've got to draw or draw a line somewhere for how much do I need in savings and how much of that savings can I take and pay off a credit card, pay down some of my debt. Because obviously, if you're paying 20% on a credit card and only getting a couple percent on interest, you're losing every month.
right.
But you still got to have that emergency savings. However, to pay your credit card, to pay your bills,
Mm,
but you don't need to have that emergency saving necessarily for the transmission went out.
mm,
Okay, I might have to use a credit card if
mm. If it
it,
exceeds it, yep.
yeah. If I'm so emergency savings, yes, got to have it. How much? Again, you need to do the risk analysis yourself. All right, what
Mm,
happens if I lost my job, or if I lost,
that's a
one of
big
us
one
lost a job? How much could we survive? Or how long could we survive? Do I have the marketable skills?
to get
Um,
back into it. Yep.
if I'm a buggy whip manufacturer and I lose my job, chances are I don't have a lot of marketable skills in welding type of thing.
Right.
So again, to each their own, but definitely got to have some emergency savings.
Mm,
We talked about the debt management companies,
mm,
bankruptcy.
mm,
I don't want to go there.
mm.
I don't want to go there.
Okay.
Military. Well, I mean, as far as
Yeah.
I would never advise that for
Yeah.
anyone.
No. No. I get you totally. Yeah.
Yeah. So growing up in the military, we said you pay your debts. You're responsible for paying your debts. Even before that, my dad, beat it in my head. You're responsible. You pay your
Oh,
debts.
say that one more time.
Even before I joined the military, my dad said, "You are responsible for your debts. You
And
pay
that's
your own debts."
another thing that we've been trying to drill in with these podcasts, like old sayings or old traditions. A man is only as good as his word. When you bought that with that credit card, that wasn't free money. You still got to pay it.
Yeah.
Or what you took out that loan, you still got to pay it. You gave your word saying, "I will pay it." It's not up to other people to pay it for you. Pay it.
And and that's my personal belief, and of course that was what the military believed as well, is
Right,
you
for
didn't
sure.
file bankruptcy. So that each person again has to make their own
Mm,
decision.
right.
But there's also implications, like you said, to your credit report, or to your credit rating for the next, what, 7 years
Seven
at
to
least.
7 year at least. I don't remember. I'd have to look. It's either 7 or 13, but I know it's bad.
It's bad, yeah. So, I mean, within that 7 years, you may need a different car.
Mm,
You may want to get a house, and if your
mm.
credit's shot,
Yeah,
so
you done.
uh,
Yep.
please, at all costs, avoid the bankruptcy route. One thing I forgot to mention when we're talking about increasing your income:
Mm,
tax returns.
okay.
Who doesn't love getting a big $3,000-4,000 check
For sure.
from the IRS every year?
Mm,
But
yeah.
but what does that do? That lets the government borrow your money all year long for free,
Interest free. Yep.
interest free. And what happens when people get those big ones? Hey,
Party time.
yes, I can go out and buy that new widget.
I can put a
Whereas
down payment on a brand new truck that I can't afford.
there you go. And I won't be able to afford the insurance.
Right.
What you can do is you go change your withholding so that you get more of that money back every paycheck, and that money then goes towards your debts. A lot of people love having that big return, but they don't think about the implication that the government's using your money for free
Well, yeah.
when you could be using that money to pay off your 20% credit card.
They got to look at it like the bank is not going to loan you money for free. Why would you loan the bank money for free?
Exactly, exactly.
No.
So yeah,
Yeah, you don't get that big tax return, but you get more in your pocket every paycheck to be used
exactly.
for
I'd rather
whatever.
take that money and use it to pay off my credit card, or invest, whatever.
Well,
And
like you were saying, is emergency funds, that
yeah,
emergency savings, putting in there, at
exactly.
least, even if it's only 2%, at least it's making its own money.
A
So,
big tax return is the worst savings program ever. That's
right, for sure.
what I'll say. All right. Okay. Moving on. The more you make, the more you spend is an old saying that I've seen come true in many cases. Um, so when you get a pay raise, when you get an annual increase, or a pay raise because of a promotion, what happens in a lot of cases, people like to just go and spend that money. Hey, that's money I didn't have. That's good. But that's money that can go to pay your bills, and help build up that savings that you need, or this savings. So just be cautious of that. The more you make, the more you spend. It's a truism that if you just look at the lifestyle of people as they, move up and pay, um, if it was good enough for you at that lower pay rate, why do you need that now, bigger truck, or that fancier car, or whatever? So
Mm,
just keep that in mind. And don't try to keep up with your neighbors. Don't try to have everything that your parents had when you're
mm,
just starting out.
right.
Um,
It takes time. It took them time. It's going to take
exactly.
us time.
my first apartment when I joined the military, I had a used tabletop that had that a guy in the office gave me, and didn't have any legs, so I had to get legs for it. So it was a Frankenstein type table, but
Mm,
hey, it served a
it
purpose.
worked. Hmm.
It did. So don't try to keep up with the neighbors. All right. Um, so I guess, Randy, I don't know if you have any questions for me. If not,
Well, yeah, well, a little bit to talk about because a lot of these guys are still trying to figure it out, or even maybe some of the old heads are trying to get it figured out. We're trying to raise a new generation of men that some of these people don't even have fathers. They didn't have a male figure to go with. And a lot of the guys that are going to be watching this channel or women have pretty traditional values. Or they, in my opinion, like when I started my first podcast, I'm not going to tell people how to live. I'm going to try to show them a better way of living, and if it helps them out, great. If they don't want it, don't watch it. Don't do it. But for me, for example, and this is one of the hardest things that I had to learn is to live, and this is what you were talking about just now, is to live within your means. If you are trying to live a $1 million lifestyle on a $50,000 a year salary, you're going to be up a shit creek pretty quick. And it's not going to work. You'll never get out of it. And really, what are you doing with that money? Who are you trying to impress? If it's not benefiting you or your family, those people that you're trying to impress don't care about you to begin with. Um,
exactly.
I'm all about, yeah, improving my own and my family's lifestyle, but not at the expense of our future, because a lot of us are getting older, and the older that you get, the less likely you're going to be hired if you somehow lose your job. Your company might have filed bankruptcy, and now you have to go someplace else. What's no through no part of your fault of your own, but now you have to go someplace else. And if you don't have something put aside, you and your family are going to be up a shit creek. You can't survive off of Social Security. I mean, for those the people out there that are contributing to 401ks, I say keep doing it. I mean, especially if your company is matching, at least meet the match, their max match. Like for my company, it's 6%, and I'll contribute for that 6% because that's 6% free money. That wasn't my money. The company gave it to me. Yeah, there's other ways of investing, and we'll go to that later on in another topic. Right now, we're just trying to get people out of debt. But the main thing, like you've been talking about and I've been talking about, really when it comes to men, especially if we have traditional values, and like you said, your wife was a stay-at-home wife, we end up being the providers, and we have to determine what is best for the family. Entertainment is not going to put food on your table. You're going to have to make that decision and stick with it. And what we call that in the military and just as men ourselves is called discipline. You got to have the discipline. If you have to have the discipline to stick with it. Now, does that mean that you can't eat out every now and then or go watch a movie with the kids or whatever? No, of course. Like for me, I'll work some mad overtime just to make sure my kids get to go watch a movie or they get a toy. No, I don't spoil the shit out of them. I want my kids to understand the value of a dollar. I mean, the way I raise my children is probably a lot different than when, some of the viewers or maybe even you raise your children. I have a job board, it's a chore board in the house. And when they do their chores and it's done correctly, they get a certain amount of money, and they have to learn to save that up if they want that. Because I'm a girl dad. I got two girls. They got to save it up for that doll or whatever they want to get. Um, but if they splurge it all at one time on some candy and shit, I mean, Daddy, I want to go get a toy. Well, what did you do? you know,
Exactly.
I
Where's
ain't
that
trying to
money you were saving?
Yeah, exactly. And, their birthdays and Christmas, I'll give them a little splurge, stuff like that. Family. But, day-to-day operation, people like to give allowances. I'd rather have my kids earn it so they can learn what you've been talking about ahead of time, because it takes time and it takes patience, and you need to develop the habit. Otherwise, the minute you get out of debt, you're going to be right back into it.
Exactly. It goes back to that example about working out or dieting.
Mm,
Okay. Once you've lost the 10 pounds that you were trying to, lose. Okay. Now you go back to eating ho-hos and ding dongs all the time and, and not exercising. No, you want to continue on that trend. You want to continue um, being the best that you can, whether that's physically, mentally, or financially.
Right. Financial literacy is something that needs to be taught more. I mean, you don't see it as much in high school like you used to, the high schools. At least mine, they taught us how to balance a checkbook. High schoolers that I see now have no concept of any of this. And then I didn't get taught about loans or predatory lending or, well, I consider credit cards predatory lending. As
Yeah.
long if you're not paying it off every month, you probably shouldn't touch it. I do believe in some of the credit cards out there that give you points toward traveling. That's money. It's free money, but only if you're paying it off every month. Otherwise, you're just giving that money back to them anyway, if
Right.
not more. You
You're
didn't
not
save
gaining
nothing, bro.
anything.
Yeah,
You
you didn't save nothing. You just
Yeah,
gave it to them.
exactly.
So
What
yeah,
on that
a lot of it. Go ahead.
sorry to interrupt, Randy, but what I would recommend is, we talked about the store cards, the J.C. Penney, the Sears, whatever's still around, put all those credit cards in your safe. Have one credit card in your wallet and
Mhm,
one backup credit card.
mm.
Um, and then if that's all you need, because otherwise it's too tempting to, hey, I'm at Academy Sports. If I use my credit card, I get another 10% off. Well, it's not worth it if I'm still paying an Academy credit card and paying
It
interest
rolls.
rate on it.
Yeah, yeah.
So um, try to limit those credit cards to just one. And the point you made, it kind of goes back to that video I mentioned of Steve Martin did that skit in Saturday Night Live. Don't buy stuff you can't afford. And again, as our listeners out there, as they get older, their incomes are going to, typically get higher and
Mhm,
they can enjoy some of those things later on.
sure.
But right now, worked with an army guy once who said the pain of sacrifice today for the joy of splendor tomorrow.
Right.
Kind of, yes, you may have to sacrifice today,
Mhm,
but keep in mind you didn't get into a situation overnight. You're
right.
not going to get out of it overnight,
Right.
and it's going to be painful.
Mm.
But the rewards are is so great when you can say, "Hey, I'm in control of my credit situation."
For sure. And in control of the income, and then and also in control of the legacy I leave behind. Now, whether that might be like assets or money that I can give to my kids or my spouse when I pass. Also, with that comes that debt too. Um, you don't want to be passing down a bad situation that your children or your spouse may not be able to get out of. So I mean, yeah, there are ways of handling stuff like that, but I would rather set my children and my family up for success just on the off chance that something, God forbid, happens to me, and then them have to worry about it. I mean, yeah, you sacrifice now, but you need to get out of that debt so you have that peace of mind, and it's not taking massive amounts of years off of your life from the stress, but
Exactly.
it also enables you to be able to do those things that you want to do. Um, just not all at once. It doesn't have to be all at once. Uh,
No, exactly, and when your kids, when they look back on the time you spent with them, it's going to be not about what we did or where we went. It's going to be about the time and the just the family that.
the memories, yeah.
Yeah, exactly, exactly. I mean, I can't tell you a great vacation that we took as a family because my dad was a farmer and six
Mhm,
kids. There
mhm.
wasn't there wasn't vacation. But I can tell you about the times that we spent on a Sunday afternoon,
Oh yeah,
just being together,
right, for
and,
sure.
those are the precious memories, and
And
it
so, and
didn't take a lot of money.
Yeah, and some of those vacations are actually kind of cheap. I mean, I didn't grow up rich, and every now and then, my parents would take us out camping, even tent
There
camping,
you go.
and
Yeah,
out in nature, having fun, having a good time, meeting people you didn't know before, riding bikes, whatever. It was a good time, or even just throwing a ball in the backyard or the front yard or whatever. It's memories. It doesn't have to be some kind of extravagant lifestyle. If you're constantly chasing the extravagant lifestyle, don't be surprised when you're caught up in some shit.
yeah,
Don't let your
exactly.
mouth overload your ass. The same thing with the checkbook. Make
Yeah,
sure your checkbook is matching the money you make.
right.
But back to a point that you were talking about, increasing your skill set. Not just increase your skill set for your job, the one that you have. Um, what's the old adage? Dress for the job that you want, not for the job you have. Same
Exactly.
thing with your skill set. Develop that skill set so you can move into those higher paying jobs. But another one that I want to point out to a lot of our listeners, since most of us are military and blue collar, which is to get the skill set to stay relevant. If something new comes out and you're a welder, some new method for orbital welding comes out, jump on it so that your old skill set don't fall off and you still keep your job, you know?
Exactly.
So yeah, I'm 100% behind everything that you just said.
All right. Well,
Absolutely.
so for the viewers out there, if there's so many places you can go for help. I mean, Dave Ramsey, he's got a syndicated show you can listen to, but just like anyone, you don't want to hang it all on one person. You don't want to hang your star on one person and say, this is the one. I've got to emulate exactly what this person does. You've got to, you got to listen to multiple sources. I mean, if you're changing a light bulb and you don't know how to do it, and you go out to the first YouTube video that you see, and then uh, the guy's hand is all cut up, you're probably going to look at another video, right? You're going to look at
For
a couple
sure.
more.
For
So,
sure.
you
Trial
know,
and error.
exactly.
Right.
Same thing financially. Don't take all your advice from one person. You
Right.
got it. Dave Ramsey, your bank, credit union. There's a place, Khan Academy financial literacy course. There's
Mm.
hundreds of others. Do your research to avoid for paying some of these things, because there's a lot of free ones out there.
Yes.
Again, one of your best assets is going to be your local financial institution, because
Mm.
they want to see you succeed,
Well, they
because the more money you have, the more money they have.
Yeah,
So
and they figure also that the more money you get, as you pay off these loans, maybe you'll take out another loan from them. If they have to go through a creditor, they're paying for that. So they're
exactly.
losing money. So the
Yep.
best thing to do is just ask for the help. A lot of people are, I don't know if it's fear or whatever, just pick up the phone. The worst thing that, like we said earlier, the worst thing they can do is tell you no.
Yeah.
Move on to the next credit card that you got and call them. Somebody's
Exactly.
liable to say yes.
Yeah.
And that's
Exactly.
one piece off your chest.
Exactly. Exactly.
All right, so just to summarize, I want to go through this one more time. We were talking about the snowball effect, choosing your um, either lowest balanced credit card, paying it off first. Now, again, I want to stress, just like you did, if you once you pay that balance off, whatever your payment was, roll that payment plus the minimum that you were already paying on the next credit card into that one. Don't treat it like free money. The longer you
Exactly.
do this, the longer you stay. You end up owing more. Like you bought that bike for $100, you let that drag out for a couple years on the credit card. You just bought that bike 10 times. Why did you just choose to give that institution your money like that? So roll it over. That way you ain't getting caught up in this mess. I believe credit cards should be more or less used as an emergency only, or if you can pay it off every month. If it don't look like you're going to be able to pay it off that month, you don't buy that shit.
Right.
You just giving away free money at that point and get yourself in a
Exactly.
mess. So snowball it. That's with the debt. If you're trying to make more, if you are running behind on money, either level up your skill set and to be able to negotiate with your company, or if you have to negotiate with another company to get your pay up, your salary. Well, I wouldn't say salary. Most of us are going to be hourly to get at least to get your pay bumped. Maybe choose those overtime hours or whatever. And if that don't work, some of the things can be like side jobs. Some of us work 16 on, 12 off, oil field hours. Pick up a handyman job if you can't get any overtime. A lot of us are blue collar guys anyway. Use your skill set in public. A lot of those people that are out there, they may not have an old man to be able to put those TVs or hang, whatever. Volunteer. Well, I wouldn't say volunteer. Put your name out there to make that money. Every little bit helps, but also reduce the amount of money that you're spending and take a hard look at that bank account. A hard look. It opened my eyes in bad ways when I went through my bank account. I was trying to figure out why I've never got money. Well, that's because I was spending money on stupid shit, and a lot of it had to do with what you were talking about, subscriptions. You were talking
Yep.
about cable. I used to think that these subscription-based services would be, just ruin cable because, I was paying all this money from cable. I'm gonna be paying less for these subscription-based services. Damn, man, I spend more on subscriptions than I did on old cable. They got me,
Yeah.
every
Yeah.
time I every time I look through this shit, I'm thinking of Dave Chappelle when he's like, "Gotcha, bitch." That I'm like, "Damn, you got me." So
Yeah.
really take a
Yeah.
look at that shit. And if you're going out and spending money that you ain't got, throttle it back. You got to pay off that debt. That way you can do the stuff that you want to do. You want to take that family out for that nice vacation, save up for it. Don't, please, for the love of God, don't put it on a credit card.
No.
Something you can't roll. If you can't pay it off that month, and I know for a lot of the listeners, that is some stuff you're already in right now. Just like Bernie was saying, you got to have that discipline to make it happen. Now, don't kill yourself. You got to have some entertainment sometimes. But
Exactly.
you spent the money. You're going to have to pay the piper one way or another. If you want that nice stuff and you want to build your credit up, you're going to have to, like he was saying, call the creditors. Always call the creditors. Don't, even if it goes to collections, call them. If you pay it off or make a deal with them, they'll pull it off, depending. They'll pull it off your credit report, so it may not sit for 7 years. If you're already in that spot, the worst thing you could do is ignore the phone call, just like Bernie said. Make those calls. Do you and your family a favor and come up with a plan and stick with it. I mean, you know what? It's hard for a lot of people. It was hard for me. It was hard for my family. We wanted to
Yeah. I don't want to
Yeah.
don't want to portray that this is easy. It is not.
There
Not
is
at all.
nothing easy about this situation. It was easy to get into it. It's going to be hard to get out. But once you get out, you don't have to sweat no more. In that extra overtime that you had to do to pay these bills off, you won't have to do that anymore. You'll have that time with your family. So again, yeah, Bernie. So if you wanted to look up the stuff on the what is it, the debt repayment,
Debt management companies.
the debt management companies, I'd love to have you back. And
All
then
right.
for all of you who are out there, please, if this helps you out, like, share, subscribe, help us all out here. That way we can get that message out to those people out there that really don't know what they're doing and they're feeling kind of lost. Statistically speaking, and I hate to talk about divorce, but most divorces happen because of financial issues. Most stress happens because of financial issues.
Big stress.
If you can help your family, your friends out, help yourself, help your brother out, help whoever, share it. That way we can get out there and help the people that need to be helped. Help yourself. You got anything else, Bernie?
No, I think we've covered it all.
All right.
I just want to thank you for this opportunity. And again, it's so important. I want to help others. I've been there. You've been there. So it's not like, we don't know what we're talking about because we've both been there. So,
I mean, yeah, you did 24 years in the service doing this and another 13 years civil service on the side. I'm going to trust your word for it. And, like I was saying, we're not going to interview people that are outside of our skill set or outside of our lifestyles. We want to talk to people that have either failed, which I have failed, and you've talked about it yourself, have failed in this, and then learned how to succeed, to show people out there that there is hope. There is ways of getting through this. It all depends on that integrity and that discipline to get you through this and help your family out.
yes, sir.
So if you ain't got anything else, I ain't got anything else.
All right.
All right, so like we say here at Toxically Mail at the end of every episode, we've done the talking, you've done the listening. Well, it's time for us to get back to work.
Stick like oak, steel toe boots kicking up the smoke, sweat on the brow, dirt in the soul. Sunrise hits a weathered face, hammer swings in a steady race. Hard-earned pride ain't no disgrace. Iron and grit, that's what we know. Built this land row by row. Iron grit, blood and bone. Chains clink, heavy machines hum. Work ain't done till the day